Hey folks, welcome to the Mortgage Minute. Did you know consumer confidence is crashing? Crashing. Okay, that's what we're going to talk about that. All right, so let's put some of these things into context. What's going on with housing and why? Okay, so we see some numbers coming out from Case-Shiller and home prices and everything else that's trying to answer my question of where's the crash? When is it going to be? Because I really want to make you guys informed of when that crash is going to be so you can get out of the market or not get into the market. Well, let's look at some of the numbers while you're sitting on the sidelines to see, does it make sense to sit on the sidelines and wait? Or should you buy now? Or what should you do? My videos I do is basically educational to inform you guys to make your own educated decision. So people are saying, Dan, so what do you think? Well, I can't make your decision for you. That's a family issue. That's a personal issue. I just want to give you the context behind the numbers so people don't say, well, the world's going to crash, housing market's going to crash, houses are going to be worth zero. Well, what's in the numbers? So let's dissect it. So the first thing I want to talk about is, well, here's where mortgage rates are. That will be there in 1 second, but home prices increase slowed for the first time in months in April. Okay, so there it is. The housing market is starting to stumble. After the stumble has to be a crash, right? Well, what's a crash, I guess? Well, maybe 20, 30%. Well, did you know we were up over 20% from April of 2021 to April of 2022? Up 20%. So those are sitting on the sidelines. Houses are getting only that much more expensive, okay? So prices are starting to cool down, but I'm glad for it because at a 20% clip a year, houses will be unaffordable in 2-3 years. All right. The next thing, pending home sales post surprising increase. So what are pending home sales? Well, basically those are existing homes that people have. They're now putting those back on the market. So the big fear was everybody that has a mortgage sub 3% or sub 4% isn't going to sell their house because now they have to get a mortgage at 6%. So, well, we're seeing some houses starting to come on the market. Also, probably a big piece of this puzzle is foreclosures. There was a foreclosure moratorium for 2 years. Now that has lapsed. So could possibly more foreclosures hit the market. It's bad for the homeowner, but it's one part of the economy that's just needed because it puts more supply into the market. The next thing is housing inventory. This is the biggest culprit of the whole thing. And people are out there saying no, 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 and all these other things. Guys, supply demand. Just take economics 101. It's supply demand. You have supply that's right here that it's at a 20-year low. It's growing, but it's still at a 20-year low based on this historical charts. Okay, so we are enthusiastic about existing homes coming into the market. So the next thing is pending home sales. Here's what happens with pending home sales or existing home sales. Kind of a lot of times when mortgage rates jump. Okay, it doesn't have to happen all the time, but I just posted this newsletter. So if you're not subscribed to the newsletter that I have, please, down below in the description, there's a link to the newsletter. It's free. I don't sell the data. It's just for you guys to dig into the details. What I tried to highlight here is specific areas in time that we saw mortgage rates jump pretty good. And then what happened with home sales or pending home sales? We can see right here, back in 2013, 2014, rates spiked a little bit. No, I won't even say spiked. They went from 3.5 to 4.5, and you saw a pullback in the market. Okay, back in 2018, 2019, rates went from 4 to 5. We had a little bit of pullback in the market. You know, here, what caused this? Well, the pandemic. And then here, there's a huge pullback right now. Well, mortgage rates basically went from 2.75 to almost 6. So is this going to be the ruination of the housing market? Well, only time's going to tell. But what I have to tell you in a nutshell, the supply isn't there, guys, and the demand is still heavy. So until that subsides from the system, but we also forget here is institutional investors. All these big companies, Black Knight and all those coming into markets, buying up basically cities. They're long-term investors. They're putting their money to work to get a 15 or 20% return on investments, and they're doing it in real estate. Plus they're getting the appreciation and everything else. And there's huge tax consequence or tax benefits to companies when they buy real estate because they can depreciate the assets and a whole bunch of other things. So when you have that big of institutional buyers out there, unless they basically belly up and just start selling their whole portfolio, which there's no anticipation of that, we're going to see stability in the market. So I'm not expecting a crash, And those are the reasons why. So now let's get to why you're here. It's mortgage rates. So the first thing we want to look at is what's going on with the mortgage-backed security, the bond that trades on Wall Street that tells us basically what's going to happen today in mortgage rates. So you can see here, when this number goes down, you can see right here, this number down, this is the price of the bond. So what happens with the price of the bond? When it goes down, mortgage rates go up. There's an inverse, there's a flip-flop effect. So when this is down, rates are up. When this is up, rates are down. We can see from the chart, there's not a lot of green down through here, but we have a little bit of stability down at the bottom. This is a one-year chart. You can see most of it is red going down, but at the bottom or the end of that chart to the right, you're starting to see some stability there, which we like. So let's get over to where mortgage rates are. These are mortgage rates published by Mortgage News Daily on a daily basis, and here's where we're at. So I want you to basically focus on the adjustments that you're seeing in this. So yes, the rates are coming down. We were at 6.28 probably a few weeks ago. Now we're at 5.88, a nice reprieve. But since yesterday, here's the movements that have taken place. So on this, let me explain this for you in detail. What Mortgage News Daily is, they survey mortgage lenders all over the country. Lenders send in their data on rates, and Mortgage News Daily blends it up and puts out the average, okay? So that's an average. So your rate's probably not this. It probably isn't even close to this, or it might be close. But the one thing I want you to focus in on, what's the adjustment from the day before? So if you applied for a mortgage and you're sitting on the sidelines and you're saying, oh, I'm just gonna wait, well, this is what's taken place since yesterday. So that's the biggest piece of the puzzle I want you to take from this. So basically across the board, you've seen rates go up about 0.03. I'll take it because there's days where we've seen rates go up and down by a quarter, maybe even 3/8. So I like that as well. So this down here says the sentiment for today is minimal because there's really not a lot of data coming out. But what we did just have come out was consumer confidence. So here's our economic calendar for today. You can see consumer confidence, like I said, was previous number was 103. Expectations for 100. We came in at 98. That's not good news for the markets right now. So that being said, my name is Dan Frio. I do the rate update every morning to make sure you're informed and educated in regards to real estate, especially the financing options. If we can be of any help to you, we are now a federally chartered mortgage team. I'll put it that way. So if you're anywhere out in the country, we'd love to help you, even in Puerto Rico. So easy ways to get a hold of us right up here. You can give us a call. You can set up a meeting. Or you can even chat with us. You saw the chat bot pop up. Somebody's always on staff, basically up until about 8 o'clock at night. If you have any questions, please ask them there. That's it for today, guys. Thank you so much for watching. God bless. I'll be back today at 1 o'clock live to answer any questions that you guys have. So hope to see you then. Bye-bye.